The challenge is the macroeconomic environment and how that translates down to venture investment. People start looking at it as if it's a nail and everything else becomes a hammer. Investors love great science, but we will not invest in great science. We only invest in great medicines.
Our coverage of Meeting on the Med in Rome is kindly sponsored by Cellares. I am Federico Cittric, reporting for Onyx Live here in Rome at the Meeting on the Med. Today we are with Sven Kili, partner at Saisei Ventures. Sven, hello.
Hi, great to see you. So my name is Sven and I'm a partner at Saisei Ventures. I'm a clinician by training. I've been an operator in cell and gene therapies for 23 years or so. And I've been working in the venture space for about 4 years now. Saisei Ventures is a boutique venture capitalist group. We invest globally, but we do have a focus on Japan. So we do about 60% of our investments in Japan. We do only therapeutic companies, and we do a lot of company build and seed and Series A. What makes us slightly different is we get very involved with our companies. We have a team that gets in and supports the companies to really help them grow and develop their next milestones. And contrary to a lot of the other US and other VCs, we aim to keep our Japanese companies in Japan and we bring the Western expertise into them. And the reason for that is we want to grow the entrepreneurial environment within Japan. So that's a little bit about us.
Sven, from your perspective as an investor, how would you describe the field of cell and gene therapy today?
So we've got phenomenal science. The challenge is the macroeconomic environment and how that translates down to venture investment and the small companies that are looking for money. So we've got a lot of really great technology out there. We've got a lot of really great companies, but they are struggling for money. And sadly, this is not necessarily the fault of the VCs because the VCs are also struggling to raise money themselves. And the reason for this is a lot of those companies that they've already invested in are stuck. And because the IPO market has essentially closed down or started reopening and has seemed to have been put on hold now, those companies can't access. And once they can't exit properly, those VCs can't reload their coffers to support new companies. And so what we're seeing is new companies coming out are really struggling to get investment. There are, however, a few that are, and those investments are fairly large. So, the IPO market's been closed a while now. We are hoping that the geopolitical tensions will settle down in the coming weeks to months, and that will open things up again, and the money will be able to start flowing effectively and efficiently. Additional to the financing, what we're seeing is a real contraction in terms of technology and technology application. So right after COVID, there was a real exuberance. There was a lot of money. We often talk about it as dumb money, which is not necessarily negative towards anyone, but a lot of the money that came in wasn't really educated about timelines, challenges, risks of venture investing and venture capitalism in the biotech sector. And so a lot of that money has left. And so we're back really to the specialist funds who are now investing. And they've become a lot more sensitive to technology, to data requirements, and also to the company's ability to spend effectively. So those days of branded Patagonia jackets and big shiny buildings at Series A just don't fly anymore. So things have contracted a lot. The upside of that, I would say, is that the quality of the data and the companies we're getting is definitely better. And I think in the long run, it's the right thing for the environment. But if you're a company who's looking for money and you're not getting it, it doesn't feel very nice at the moment.
CGT is a very promising field, but do you think there's some specific areas within the field that or where perhaps the expectations are a bit too high?
Absolutely. So I think we saw this exuberance previously about cell and gene therapy, and it's very much like a lot of other technologies. People start looking at it as if it's a nail and everything else becomes a hammer. And so they think that cell and gene therapy can solve everything. And so I think we need to be really, really pragmatic. There are certain things that cell and gene therapy is really well suited for. And there are other diseases that can be addressed very well with small molecules, large molecules, or just surgical intervention. And so I think we need to be very pragmatic about thinking, where does a cell and gene therapy technology fit into the treatment paradigm, and how do we use it effectively? And that will then dictate how much it'll get reimbursed for, and that will then dictate how much investment the company can get, etc., etc.
How quickly do you know if something is fundable or not fundable?
That's a really good question. I think there are a couple of stages. So probably 60%. Once we start speaking to someone within 10 or 15 minutes, you know it's not fundable. And so, things will be like unrealistic expectations, technology that's already been done before, evaluation that's quoted that's completely out of the realms of reason. And then for smaller funds like us, a really high, large ask. The others will tend to need to dig in a little bit more. We'll need to go back and we'll need to ask questions. We are very fortunate because we are specialist biotech and cell and gene therapy investment group. We've got a team that has done this before and they know what they're talking about. So we're able to get very deep very quickly, and we can tend to pick up the science fairly fast. And so within probably 3 or 4 weeks, we can weed out the rest. And then we get down to the ones we really, really like, and then the diligence really starts.
And finally, Sven, a message for those companies, perhaps companies that are watching us.
Yeah, so the messages I would say there are, 1, be patient. 2, be very harsh on your own technology. Don't drink your own Kool-Aid, as the Americans love to say. Think about, where does your technology fit? And, investors love great science, but we will not invest in great science. We only invest in great medicines. So make sure your great science can become a great medicine. Make sure you plan everything, you understand what you're talking about, you understand what the market is, who your competition is likely to be, where you're likely to fit in, how you're going to be able to scale, and then reach out to investors, make contacts, use your contact book to create and get warm introductions. We are very sensitive beings. We don't like cold emails coming to us with a request to click on someone's calendar and make ourselves our own appointment. We prefer to get a reference from someone we know already. And then think about your pitch deck. Be really careful and thoughtful about your pitch deck. Your pitch deck is your first impression. And when you go on a date, you don't want to make a bad first impression. It's the same thing with a VC. It's about starting a relationship. So think through that. Do your research on the VCs. Understand what their background is. Understand where they come from. The last thing I want is someone explaining to me the biology of a disease. That just doesn't go down very well. That just says to me they didn't do their research. So think about who you're meeting. Be prepared. And be flexible and listen to some of the advice and the suggestions that the VCs give you. They give it to you because they've seen it before.
Sven, that's really good advice. Thank you very much for your insights and for joining us.
Federico, thank you very much, and enjoy the rest of the sunshine here.